If my memory serves me correctly, but around the early 2000s, we started to look at trying to help consumers better understand the interest rates that they were paying and also the fees and charges attached in there. So let me tell you a backstory. What we had was competing lenders who were showing a really cheap interest rate, but they had lots of other fees and charges attached to that loan, from very large application fees, very large ongoing fees, and potentially very large discount fees or break costs. Now, what that meant was people were just looking at the interest rate and they were saying, well, that one looks the cheapest, I'm just going to go for that. So the regulators thought, we've got a bit of a problem here. We need to be able to help consumers be better informed in terms of how they select their loan or mortgage product. So they had this concept called the comparison rate. Now, there's been a lot of conjecture around this comparison rate from its first introduction, and that's why I wanted to talk about this, to give you that backstory and that knowledge. What the problems are, and I'll just go through them line by line, is it was only set on a $150,000 mortgage. It was set over a 25-year period. They did need to, from the calculations point of view, they needed to calculate it against something. But here's the problem with it, right? The problem with it is that not all fees and charges are included. So they might also have, say, redraw charges or bank statement charges or all of these other charges. And what happens when you do get your mortgage documents, there are usually a schedule of fees that are included in that mortgage documents that are called, what if charges. So if I did want extra bank statements, if I did want the bank to do this bit of work, if I did want this done, etc., and the banks had all of these other fees and charges attached to it. So it didn't include those. So, was it a true representation of what the true interest rate cost was? That was a question mark. And secondly, and this for me was probably the bigger things, is it didn't factor in all of the potential saving options in some of those new featured products, such as offset accounts and any type of fee waivers or rebates that may have come to those borrowers as well. So over the journey, and even now to this day, we're seeing some of the digital bank offerings where they basically reduce the interest rate over the time of the borrower as well. So I just want to take you through an example. So we'll jump into the example over here. And this is sort of how they do it, right? So effectively what we've got is a $150,000 loan balance, 25 years. I've got an intro interest rate of 4.5. I've got a standard variable rate that it's going to refer to. I've got some upfront fees and some monthly fees. So all of a sudden, what might have looked like a terrific introductory rate, reverting to a more competitive rate, meant that the overall loan over that period was 5.52%. Now, that is another way in which the banks will potentially try to bring you into their environment and win your business through these introductory or honeymoon type rates as well. So again, comparison rates are a guide, but they're not that fantastic when it comes to when rates are moving around and when all of those other charges occur. And because they're set over such a long period of time, it's not where I would play. So from that point of view, what I'm talking about here, coming back to that, is I would only use it as a very, very broad guide only. And I would be really concerned about, what are these saving options doing in terms of the overall interest that I'm actually paying in terms of how that helps me out. So you will see them from time to time. So when we go into, let's have a look at an example with ANZ. So here we are here. We can start to see that we do have the comparison rate information. So scrolling up here, we can see there is the advertised rate at 3.69, isn't it? And there's the comparison rate here, and there's the information in terms of what would be included. Now you can see with the basic variable home loans, there is not a very, very big difference between comparison rates, because the whole idea of a basic loan, it's a no frills, low cost type of loan. So that's why, there's very, very marginal difference between that, because effectively it's probably no application fee, only a small amount of one-off fees that would be charged over the term of that loan, so there'd be no ongoing fees. It probably just is the upfront fee, is that small amount of $300 or whatever it might be, but then effectively no other costs associated with that particular loan. So I would say again, I'd be very cautious about trusting what comparison rate fees do. And I've got some other exercises where I'm looking at some other lenders throughout the course of this, these lessons, these video lessons. So I'll make mention to those comparison rates as we go through as well. But that just gives you an idea in terms of lesson number 2. What we are talking about here is there's problems with comparison rate. It is not a perfect science. The regulators reviewed it and then thought, well, do we just take it out of the market? People are getting more educated these days. No, they decided to leave it in, but you just need to understand that those comparison rates aren't as good as working out a true cost rate, which I'll be talking about later in these lessons as well. So there you go. That's the problem. That's number 2, the problem with comparison rates. So thanks for watching that educational session. As you know, I'm passionate about this stuff and I really do want to see you take action. Now, whether you do that yourself, that's fine. But if you do need help, I am super proud of our mortgage team here at Empower Wealth, and they would love to help you. They are helping thousands of people every year, just like you. They're multi-award winning. We've won customer service awards and national awards for the work that we do. So I know that they will be able to look after you. So leave your details below, but please make sure you do something with this information and knowledge that you've just learned about. Now let's get into the next episode.